China Moon Strategies founder and president and former U.S. trade rep for China Affairs, Jeff Moon, is with us on the phone. Jeff, it's great to get your take because it's such a high-profile visit, but none of the deliverables that we've come to expect with something on that par. What do you think expectations were, and were they met?
Well, I think of this not just as an isolated event, but as part of a process. The presidents met last November and decided they wanted to improve relations through a series of cabinet visits. So the good news is that the Yellen visit continued to stabilize the relationship and did the things she described. She met the new leadership, she compared notes, and we remain on track for a possible Biden-Xi meeting in November during the APEC meeting. The bad news is, of course, that no minds were changed about the key issues. And I see this visit as the high watermark in that series of cabinet visits because there are three factors that threaten to further sour relations in the next few months. The first is that Yellen's portfolio did not include the most controversial issues, which are tariffs and export controls. Those belong to the U.S. Trade Representative and the Commerce Secretary, who may be visiting and will generate more controversy. The second is that we know more restrictions are coming in the future months. Outbound investment is part of her portfolio, and she talked about it, but there's also cloud, AI, and other restrictions out there. And the third problem is what you've been talking about is China's economic problems. China's economic statistics continue to show weakness. China's on the brink of deflation. The Communist Party is not known to blame itself for its own problems, so it could very well try to deflect blame to the United States. And one story that I haven't seen reported in the American media is the fact that the Chinese media has been polite to Yellen, but extremely hostile to the United States throughout. And that signals to me that when the situation gets tougher, that rhetoric from the Chinese side, which is directed by the leadership, will get tougher as well.
Can you really separate out the economic relationship from the security relationship? I mean, this was her challenge going in and seemingly coming out.
Well, they are intertwined, but if you look at all of the U.S. statements, about restrictions on China or sanctions are all framed in terms of China's civilian military fusion strategy, which intentionally is designed to take civilian technologies and use them for military purposes. So to the extent that those kinds of dual-use technologies can be excluded from economic activity, yes, I think there is a separation.
Jeff, love to just end on sort of the Chinese economy itself, which we've been talking about this morning a bit. Much weaker, perhaps, than many had anticipated coming out of COVID. What signs are you looking at, and how strong or weak do you think that economy is right now?
Well, there are various measures that the Chinese have taken traditionally. Stimulus is the go-to move that China takes. But from my perspective, the biggest problem, and one of the biggest problems, is real estate. And I have not heard anyone give a viable solution to the real estate crisis, which is unique to China because of the unique way that China owns all property. Local governments sell the property and are heavily dependent on that for serving the local population. That situation is something that China is deferring, including through some measures that were issued today, but I don't see how they finally resolve it.